Emerging economies will face extended periods of tight global financing, according to South Africa's Reserve Bank Governor Lesetja Kganyago. Speaking at the IMF and World Bank spring meetings in Washington, Kganyago highlighted that while financial markets remain volatile, the global financial system is still resilient, backed by strong capital and liquidity levels. Furthermore, he also noted it's too early to assess the impact of recent trade tensions on global inflation trends. He has more from the governor's media briefing at the G20 ministerial meetings.
There was also a very strong view that the global financial system and financial markets have witnessed heightened volatility but remained resilient, that the core of the global financial system remains resilient with adequate levels of capital and liquidity. Importantly, the regulatory reform agenda that we embarked on in the aftermath of the great financial crisis is bearing fruit and seems to have shielded the global financial system well, and that we must bid these reforms to continue to provide certainty with respect to that regulatory reform agenda. And clearly the economic developments and the economic situation that we are in poses different challenges to different countries. For the countries that have got fiscal space, that the fiscal space would have to be deployed to try and get demand going. But for those countries with no fiscal space, they are going to have to rebuild buffers. There was also a sense that the disinflation process that was embarked on in the aftermath of the great inflation of 2022 is slowing down, and in some respects might actually be reversed, which had led central banks to be cautious.